Silver investors could make a fortune. Billionaire Eric Sprott and other top gold analysts predict that silver will dramatically outperform the yellow metal. In order to maximize your exposure to silver, consider shares of Golden Arrow Resources trading on the TSX Venture under GRG and the US as GARWF, where insiders have accumulated 50% of the company, and billion-dollar giant Silver Standard Resources has taken an 8% stake in the company. This company has 250 million ounces of silver resources and is headed up by the one man who is responsible for the largest silver deposit discovery in history. Learn more at futuremoneytrends.com/silver100. Greetings and thank you for joining us at futuremoneytrends.com. I have probably what is my personal favorite guest. I'll tell you one thing. If you are interested in silver, interested in energy, my goodness, every time I hang up at the phone with this guy, I think I have to order as much silver as I can physically buy. The data is overwhelming. You won't find it anywhere else. And trust me, I mean, I see even the top silver guys out there sharing his work. This is original content. And I think he's one of, if I don't want to down anybody else out there because there's a lot of great people in the sector, but I think this is probably the best analyst for silver, or at least one of the best in the top 2 or 3 there. Our guest today runs a website, srsrocco.com, and his name is Steve St. Angelo. Steve, thank you for joining us.
Well, thanks, Dan, for those words. I try to focus on new fundamentals. I know one of the things you hear today with a lot of investors or folks in the precious metal industry, there's really nothing new to say. We're just waiting for all this stuff to finally crash. But there are new trends, there are new things changing all the time, and I try to keep an eye on those and present those on the site, the SRS Rocco Report site.
Yeah, certainly very unique, all original data that you're pulling out and collectively putting together. Definitely everybody should bookmark the website and visit it weekly, and also subscribe for the email list. Well, hey, Steve, let's start off with the most recent post you have up on the website. You're pointing out a very unique situation right now that's rising up in the silver COMEX registrations. Can you let us know what have you found and what have you just shared with your readers?
Well, earlier this year, late last year, early this year, we saw the registered gold inventories fall to their lowest. It was like, I think, 89,000 ounces. That was all. It was in the registered gold inventories, and those are usually available for delivery. Now, that pushed the owners per ounce to 500 to 1. That means there is 500 owners per each ounce of registered gold. Well, since the beginning of the year, the registered gold inventories have climbed, and I think they're 1.7 million now. And so their actual owners per ounce has fallen to like 33 to 1, much lower. But something's changed in the silver market, and if you go to my website and check the first article, the actual registered silver stocks are the lowest now, I think, over a decade, more than a decade. They're at 23.3 million ounces. Now, they were 70 million ounces, let's say March of last year. They were that high, and they have fallen to 23.3. The open interest, Dan, is at a record high. And so when you have a very record high open interest, you have a lot of silver, let's say a lot of silver ounces that's for delivery or in open interest. So right now it's 44 to 1. That's how many owners per ounce, and it's risen almost 3 times since the end of 2015. And I mean that is an amazing number. And if we go back to 2011 when silver hit 49, it fell to a low. The registered silver stocks at the COMEX fell to a low of 26.4 million ounces. Well, the open interest, total ounces in open interest was 750 million. That's still pretty good leverage. But today, it's 23.3 million ounces, and it's over 1 billion ounces now of open interest. So that's why we have that huge 44 to 1. But what troubles me is that when the price of silver fell at 2009 to its low, and then it rose to 2011, the registered inventories continue to fall to 26 million ounces. Well, that was because of industry was consuming more silver and investors were consuming more silver. Well, now what's interesting, after we had that build when the price peaked in 2011, it started to build back up to 70 million ounces last year. It fell. It's fallen considerably, and it continues to fall this year while gold inventories continue to rise. And I think the difference now is China is stockpiling silver, and we know this because the Shanghai Futures Exchange, their silver inventories, Dan, are now up to 60 million ounces, and they were only 7.5 million ounces August of last year. So I think what's happening is something is different in the silver market. If we're having slower growth, less industrial demand, we should see a rise in the registered silver inventories as we're seeing on gold. So that's a troubling sign, and we'll see what happens going forward.
Yeah, I mean, what are your thoughts? I mean, this obviously is not sustainable. It appears that there is some sort of silver shortage brewing, even on the COMEX, where the physical is not as important.
Yeah, I think the issue is always going to be silver first, because I went back and I looked at the data. Most silver that's recycled that comes back into the market is silverware and industrial applications. That's where the majority of silver is recycled, not jewelry. There's just not enough silver in a jewelry, a silver jewelry, let's say ring, or in a necklace. There's not enough to get you to go down to the pawn shop and get a few bucks. It's just not worth it. And also, coins are not being really recycled that much. So the problem is there's all this silver that's been consumed that's never going to come back into the market. And so what's happened, I believe the market, the overall market is tight, even though the price doesn't show it, and even though, let's say, the silver basis doesn't show it, but there's a lot of silver paper out there, and I think the silver paper is depressing the price.
Excluding American Eagles and Maples and these coins that people like you and I would sell a lot of different kind of silver, like regular bullion, before I let go of the Eagles and Maples. So excluding Eagles and Maples and much of the coins that will just never get sold again, how much available silver is out there right now, even available, above ground available silver?
The number I throw out is about, there's silver that's held in depositories around the world, exchanges, ETFs, supposedly. We don't know if it's all there. And then there's custodial vaults. But if we include all the silver that could be dumped on the market that doesn't have to be recycled, it's bullion form. It would be about 2 billion ounces.
Okay, and that's excluding these coins like an American Eagle.
That's excluding the coins. It would be about 3.5 billion if you include the coins. But still, let me tell you this. Now that you brought that up, you might want to get into this, but I figured from 2008 to 2015, all physical silver, all of it, the coins, bars, whatever, it was 1.5 billion ounces that was purchased during that time, and that came from production and recycling. So we had silver bullion that was still out there in old hands. So that was 35 billion now. That's how much it was worth, Dan. 1.5 billion ounces of silver is worth $35 billion, and this is acquired by the less than 0.5% of the market. Now, if the market cracks, when the market cracks, and the wealthy and the institutions and the hedge funds and now the Chinese traders, they've been trading copper and they've been trading iron. I hear now their next thing, or one of the next things, is to get into silver. I heard 100,000 new commodity trading Chinese have just entered the market in the last year and a half. 100,000. If they go to silver, just 100 billion of let's say money going into the silver market, you would need 4.5 billion ounces of silver for the same price. There won't be 4.5 billion ounces, so the price will rise. So this is the issue I think we're going to face.
Now, how about mine supply? You and I have talked about this in the past, and of course, late last year and even early this year, there was no confirmation of a bull market, and specifically in the mining shares, and it was looking pretty grim because you had copper mines shutting down, zinc mines shutting down, major ones in Australia and Canada, which, again, about 75-80%, for the audience members that don't know, of silver comes from these non-silver core silver producing mines. So what is the update on the mining front and new supply front? Because we're still at the birth of the bull market. It's still only here in its first few months. But has this changed the trajectory of what's going to happen with new mine supply over the course of the next year to 2 years?
I think so a bit. I think so. It depends upon what happens with the U.S. and global markets. If we get a real, let's say, they're propping the markets up. We know that they're buying bonds, they're buying stocks, so they're levitating the indices and the stock market and the bond market, while the underlying fundamentals of Chinese, of Asian, European, and U.S. Market fundamentals, economic indicators continue to decline. So what's happening is they're not showing the heartbeat of the economy. They're inflated. So I think, Peru, believe it or not, Peru's copper production is up 50%. They brought on a couple of big new copper mines. Their silver production, believe it or not, is up 15% the first 4 months of this year. Overall, silver production so far, the first 3 months of the year, is up about 1.5%. Not much. But that's mostly because of Peru. But I think when the situation gets worse in the overall markets, that's when we're going to see the prices of the metals, of the base metals, really fall. And that will impact silver production. But right now, silver production is a little bit higher than it was last year in the first 3 months of 2015. But I look over the longer term. I think we're going to be hitting peak silver. Even if primary silver mining supply increases, if the price of silver goes higher to 20 and 30 and 50, let's say $100 when it gets there, primary silver can't bring on that much more silver. And base metal won't do it. But I think world silver production will peak here shortly.
On the monetary front, Steve, Brexit obviously is the news of the day, and as we record this interview, the results should come out tonight or very early in the morning. What are your thoughts on Brexit and the recent decision of the Fed to kick the can again? How are these monetary events or potential events like a Brexit going to affect silver going forward?
Okay. The Brexit, it'll probably be a no vote. I'd be surprised if it was a yes vote. It needs to be a yes vote for the sanity of the British people, as well as Europe and the rest of the world. But unfortunately, it'll probably be a no vote. And we may see a little downturn in the metals prices for a while just because of that. I'm not concerned with that at all. We all live long lives. And so I'm looking for the mid to long term. The problem with what's happened with this British exit is the same thing. You have Trump now becoming a candidate for presidency and being somewhat as a threat to the establishment. People are tired of the establishment. They're tired of the establishment in Europe. If it doesn't happen with the British exit of the Union, England leaving the European Union, it's just a step in the direction of that disintegration. Now, the reason why we're continuing at low interest rates, Dan, is because there's too much debt. We've piled on all this debt, and now we can't really finance the debt. So interest rates have to fall, and they'll continue to fall. If interest rates go up, the whole thing falls apart. And so it also ties into the energy. Low interest rates brought on more energy we really couldn't afford. It rose the price of energy higher, which people really can't afford, but they can when you're printing money. So the situation going forward, even if we do get a yes vote, which I doubt, we could see changes quicker. But if we don't, the situation will start to disintegrate as this massive amount of debt that we've accumulated in the system is no longer sustainable. And so I think that will impact. I mean, let me just say this. The gold flows into the ETFs and funds in the first quarter of this year were 365 tons. The last time it was that much of a spike, we had to go back all the way to 2009. What happened in the first quarter of 2009 when it was 464 metric tons going into gold ETFs? The Dow Jones was crashing to 6,000 points. We only saw a 2,000-point correction in the Dow in the first quarter of this year. But mainstream investors, not precious metal investors, they buy physical, but mainstream investors were piling into ETFs and funds on just a 10% correction. So what happens when the markets finally start to disintegrate? That's when I see the mainstream investor. That's where the leverage is. It's not the precious metal investor. The mainstream investor finally gets into gold and silver, both physical and funds. Then we'll see fireworks. And how much longer they can prop up this market, Dan, it'll be interesting. But it's almost touching 18,000 again, the Dow Jones. It's really insanity.
I'm sure it'll make new all-time highs when they vote to remain. It's just incredible, and I think you're right. You know, I had the chance to watch that BREXIT documentary, and my goodness, it's just frustrating to even watch something like that. This bloated bureaucracy that is just, it just robs money from the private sector to keep the slush fund going in the government side. Steve, lastly on the investment side with the investing in silver, since for the most part that's what we talked about today. I was going to talk about oil, but maybe we can catch up on oil in a few weeks. So silver, where are you buying your bullion from, or where do you recommend readers buy bullion? And are you speculating in the resource shares at all?
Okay, good questions. Dan, up until recently, just a few months ago, I spent most of my time researching the silver industry, mining shares, energy, fundamentals, and I paid no attention to the retail and wholesale market. I became acquainted with Tom Cloud through another associate of mine. And over this time period, I began to understand he was one of the most intelligent, honest, and upfront dealers in the industry. And every time we've had these conference calls and discussions, I've learned so much about the industry. And I had a neighbor a few years back. He told me he purchased gold, and I was really glad. And then he told me, even though the price of gold had moved up from where he purchased it, he was very low. He was much lower than what he bought it for. And I found out that he purchased from one of these large dealers that sells the older coins, the more pre-1933, and they charge very high commissions. Tom Cloud is a numismatic specialist. He's been doing it for 40 years. He can grade any coin. He knows all about these older coins, but he doesn't believe people should purchase those. He sees the bullion is the best bet, so he helps people get out of those coins at no cost and into regular bullion. And so it was understanding about his kind of ethics that I included him, and I'm sponsoring and working with him now. I'm associated with him on my site. So if anybody is interested to learn more about what to purchase, the process of it, if they're new, or even if you want to store metal, Tom Cloud offers he works with Dylan Gage and IDS, and they offer the lowest storage rates in the industry for storing gold and silver. And you can go to my website, go to the Precious Metal Investing, or you can check out the Precious Metal Storage Program. And it's worth a conversation. It's worth a phone call, because unfortunately, a lot of people are either getting taken by these large dealers, or they're overpaying. Because this one last thing I didn't realize: when you buy from an online dealer, you may get a lower cost on a special. Tom offers some of the best rates out there. But when you go to sell to them, you're actually selling, and they're charging you a commission to sell. Tom does not do that. He does not charge on the back end. So that's the reason why I am working with Tom Cloud, and anybody who wants to talk with him, please go to my website. You can get his contact information there.
Yeah, I think there's so much in the bullion industry, as far as, these guys who sell metal on the weekend, taking a risk there. A lot of times the mailing isn't really factored in when people are comparing apples to apples. It's best just to find, a high integrity individual like the one you just mentioned. Obviously, I don't know Tom Cloud, but I know you. So by the very fact that you're giving him an endorsement, I know that he is everything you say he is. So, I mean, it really is, for anybody listening looking to buy metals, it's a lot more than just going out and finding the cheapest one, especially right now. Man, silver's only at $17, gold's at around $1,200, and already we're seeing the U.S. market with fake coins. This bull market has barely begun, and to see fake metal in the market is actually kind of surprising. This is something you would expect when silver is north of 50 and gold's north of 2,000. But here we are, barely into this, and we're already seeing stories about fake coins coming out. How about the mining shares? Are you involved in that at all as far as a buyer? I know you don't recommend them, and I'm not asking for any specific picks, but are you speculating at all in that sector?
I have not yet, and I was actually I was a little bit surprised about how quickly the mining shares took off this year. I do plan on getting into them, and when I do get into them, there's a handful of silver, primary silver stocks that I would invest in. And these aren't the juniors. Now, some of the juniors have done great, excellent results, and usually the juniors, the explorers, always seem to do better during a huge rally. But there are a few of the miners the primary miners that I really like, and I would be investing in those.
Steve St. Angelo with SRS Rocco Report. Thank you so much for talking to us. I love everything you put out, sir. Really appreciate the tweets. Kind of alerts me that a new article was just posted. And anyway, really thank you for your time and all the research you've done. Everybody, check his website out, and you'll want to make sure that if you're going to buy precious metals, also give Tom Cloud some business. We definitely want to support high integrity individuals in this industry. Thanks again, Steve.
All right, Dan. My pleasure.